The scary reason why Warren Buffett is not buying stocks and holding cash. Welcome back to Wealth-ology. For today's video, we will be going to talk about the scary reason why Warren Buffett is not buying stocks and holding cash. Let's get started. With the help of his investment company Berkshire Hathaway, Warren Buffett has a massive cash stash at his disposal. He has 144 billion USD on him as of the most recent quarter in 2021, ready and waiting to be deployed. You could assume that he is buying stocks left, right, and center with all of this cash on him. However, this is no way the case. In actuality, the opposite is true. As can be seen, he has hardly purchased any stock this year, only 5 in the first quarter and 4 in the second, and each of these pies is incredibly tiny. In fact, the total value of the purchases, when added together, equals 1.08% of the portfolio. Likes little. But when you consider the stocks he sold, it appears that he is constantly selling the shares he holds. When all things were taken into account in terms of proportion, he sold 4 times as many stocks as he had purchased in 2021. Indexed fund. We can learn a lot by why Buffett is saving all of his money by looking back through history. The 2008 crisis had one amusing aspect. Most investors were panicking and having the worst time of their life at the same moment. Buffett was ecstatic despite the fact that everyone else was losing money that year due to falling stock and home values. Why? Everything was on sale because he could acquire stocks for ridiculously low prices. But what was the one thing Buffett absolutely required if he was to profit from this crisis? He needed to have cash on hand. He couldn't purchase anything if he didn't have cash. Consequently, in 2007, shortly before the recession began, he was frantically putting money aside. He had about $7 billion in cash, which was a large sum of money for him at the time. What do you suppose he did with his cash stash when the crash struck in late 2007 and early 2008? He began investing his money and was amassing stocks like a crazy. Just how affordable were stock prices? Over the long term, this turned out to be quite advantageous for Buffett. Since the crisis, the price of his firm, Berkshire Hathaway, has increased by over 500%, or 6 times. And Buffett is still employing the same method that he has for the majority of his investing career. Buffett concentrates on the long term, which seems to have worked out for him, while other investors concentrate on their short-term gains. He also remarked that he is constantly searching for the huge business chances that very infrequently present themselves. But when they do, he will require a large sum of money, possibly hundreds of billions, to buy the elephant companies. For instance, in 1972, Buffett required a significant amount of cash, at least in those days, to purchase C-suites. He paid $25 million to buy the business outright, which was a lot of money back then, but it paid off. See's Candy generated $383 million in revenue and $82 million in profit in 2020. Consequently, the yearly profit is now greater than 3 times what he originally spent to buy the company outright. Buffett would not have been able to purchase the company outright and would not have made all of that money if he had not held funds on the sidelines. Buffett needs the large sum of money to fund his elephant gun, as he puts it. Buffett wants to have it on hand in case a large company comes along and offers itself for sale at a discount. However, there are further explanations for both the cash hoard and the absence of stock purchases. Harvard. The thing is, Charlie Munger and Warren Buffett, during these times when prices are so high, they play the game more conservatively compared to most investors. And it doesn't look good in the short term. Because everyone says, look at all the profit that you've missed out on, you guys are silly. The SP 500 has gained 90% in just over a year. And you've had your money in cash? But Munger says, listen, if we look back throughout history, there's been plenty of times where people who have been burned because they invested all their money at the top of the market. Harvard, supposedly the place where all of the smartest minds congregate. They fell for this too. They plunged their money over a decade ago into a very pricey stock market. They used their cash to buy stocks, to buy bonds, to buy hedge funds, and private equity. And you can guess what happened. The market crashed and Harvard suffered badly. They had to tighten their budget. They had to defer expansion plans. They had big investment payments on bonds issued to cover their losses. It was bad. James F. Rothenberg, Harvard's treasurer, said the biggest mistake was not to take in some of the cash off the table and place it into safer accounts, as trouble started brewing in the markets and the economy. We all can look back now and say we wish we did something different. So a lot of people are looking at Buffett's strategy now and saying you're missing out on all of these profits. But Buffett is doing this for a reason. Raining gold. Alternatively, there are investments available that essentially offer free money. It was a fantastic time to invest in 1949 as the world was beginning to rebuild after the Second World War. The majority of the companies you could have purchased on the stock market would have prospered. In fact, if you had invested $100 in the S&P 500 at the beginning of 1949, your money would have doubled to $521 in just 10 years. Even more recently, gold was pouring down. What happened in 2020 about oil? The worldwide blackout and the suspension of travel and transportation. Oil prices plunged precipitously. In just 4 months, they decreased from $65 to $20. Clearly, this was a fantastic chance to purchase oil. After that, there was simply a ton of money to be made. And to be honest, it was pretty clear. It was metamorphically raining oil or gold. The key idea is that possibilities have existed throughout history, where there has been easy money to be made, but you must have cash on hand. Otherwise, you risk missing out. Buffett is the best at understanding this, which is why he has so much cash on hand. Which aspects of this subject have you found to be very useful? Please let me know in the comment section below. And if you like this video, please give it a thumbs up. Turn on the notification bell and subscribe to our channel for more. Thank you for taking the time to watch. Stay tuned for our next video.